In Politics and Money today, Kevin Davitt of CBOE Global Markets joins us now, and wonderful to have you on the show.
Thank you so much for having me back.
A lot of traders and investors are looking for insights into the 2020 presidential election. So what's going on with the election money? How is that trade shaping up overall?
That's a great question, and it's exciting because we're arguably just getting started now. I think you could look at any election cycle as kind of one of those known unknowns.
Right.
And this is no different. And so with that in mind, last year, a number of market participants had interest in being able to potentially offset or express a market sentiment further out in time. So as a result, the exchange listed September, October, and November VIX Futures ahead of their typical cycle. And we've seen fairly considerable pickup or activity further out the curve, specifically in the October VIX Futures. Open interest in that contract has grown to over 6,800 as of Friday. And I think broadly that's a testament to interest and the potential for elevated volatility further out in time.
Would you say that you're seeing an abundance of hedging in the market?
So that's another really, really good question, and one that's difficult to answer with any degree of certainty. I think you could argue that derivatives broadly were created and continue to be used as a way to potentially offset a pre-existing risk. And so with that in mind, at any point in time, I think that a lot of the trading that goes on in index options, in VIX futures or options, is probably somewhat related to that, but we can't distill it down to this is hedging. We can't know intent specifically.
What other products does CBOE offer, perhaps, that could be good indicators or places where the so-called smart money might go as it sets up for that presidential election?
Yeah, I think everyone likes to look for a signal in life or in capital markets generally. From my perspective, I think you could look at the VIX term structure, the relationship between different expiries, as a potential signal. And what it seems to be saying, at least at this point in time, is that there's the potential for a pickup in volatility further out in the year. The October contract specifically looks at forward volatility at that point in time, so that will encompass the election in early November. And so that's something that I'll keep an eye on and could arguably be instructive for traders, whether they trade directly in volatility markets or just generally.
Now, how does this year's trading activity compare to the previous presidential election?
That too is a great question. I'm too young to remember that last one. Just kidding.
It felt like yesterday.
Yeah, no, the cycle does come quick, and I think that really the overall theme here is that there seems to be an anticipation of potentially greater volatility.
Yeah.
We're seeing activity further out the curve, arguably earlier in this election cycle. What that means is not mine to determine, but I think it's a testament to the broad utility of options generally and the volatility complex.
Well, I can tell you a story about this trading floor. I'm down here every day, and 3 days going into the election, we heard the roar from the floor, the sound of traders escalate, and then it really maintained at a high level. And by the time we left here on Tuesday on election day, I knew that it was a Trump win and a Clinton loss, because the trading just became so elevated for so many days. It was just indicating an upset.
Well, we got 9 months to look forward to, right?
I love being on the trading floor. Thanks
Me
so much
too.
for being here.
Thanks for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.